This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Asian stocks are set to extend Wall Street losses as weak US economic data suggests the Fed is dragging its feet on rate cuts. Investors are jumping into treasuries as the latest haven trade. Tech earnings also in focus. Weakness in China overshadowing Apple's upbeat results, including a return to revenue growth and bumper iPad sales. Plus, Amazon's profit outlook pressured by ramped up AI spending, while Intel plunges on disappointing forecasts and massive job cuts. And of course, inflation data is always front and centre. We've got some gauges just out when it comes to South Korea, the CPI numbers just crossing the Bloomberg. Of course, this after the Bank of Korea tightened its monitoring over the markets on uncertainty over the US election and some of these other risks that are facing the markets at the moment. We are seeing consumer prices rising 0.3% month on month. That is largely in line with estimates. 2.6% gain year on year, slightly hotter than the 2.5% that had been expected. If you strip out more volatile food and energy rises, we're seeing 2.2% year on year is where that is sitting when it comes to what we're seeing with South Korean levels of inflation there as well. So really in line with expectations that core CPI has continued to ease further in July, and with both of those gauges really under 2.5%. Certainly Bloomberg Economics expecting the BOK is now confident about that stabilisation around the 2% level, Shery.
Yeah, it's really all about monetary policy, isn't it? Bloomberg Economics expecting that rate cut to come from the BOK later this year. But take a look on how we're setting up for the Asian session, because we're seeing a sea of red at the moment. Of course, we have the Nikkei seeing its worst day since 2020 on a stronger Japanese yen. We're still trading at around the highest level since March against the US dollar. We also had manufacturing activity in China unexpectedly contracting, so we had that pressure in Chinese assets as well. You can see the last trade there, it was down 0.4%, while the offshore yuan is holding steady at that 724 level. But really, it's about those price swings, right, in asset markets across the board overnight. We saw the pressure in the U.S. session. Take a look at how futures are trading at the moment, because we had the S&P 500 falling, and it was really about those that safe haven demand, right? So the bond rally becoming the latest haven trade. So we had the 10-year yield falling below the 4% level for the first time since February. And it was all to do with also the earnings season. We were trying to digest those numbers. Take a look at the after-hours trading, because the Nasdaq 100 saw its biggest one-day reversal in a couple of years. We talked about Intel and Amazon disappointing this earnings season. Intel also announcing job cuts, not to mention a cut to dividends as well. Apple, on the other hand, topping revenue forecast, despite the fact that we did see some more sluggish sales in China, Heidi.
Yeah, let's bring in for some more details a Bloomberg technology reporter, Mark Gurman. So, Mark, what kind of really jumped out for you out of these set of numbers?
Yeah, so the top line is you have a beat across the board. So Apple beat Wall Street expectations on revenue, but also all the product categories from the iPhone to the iPad, Mac, wearables, home and accessories, as well as services, right? So that is very good news for them. However, the iPhone did dip 1% year over year. Apple says they actually grew on the iPhone from a constant currency basis. But this is some new term or phrase they've pulled out of the hat over the past couple of years, as the growth hasn't been as sustainable as in prior years, but that is still the reality. The other thing to note is China. It's down about $1 billion on an annual basis. This time it was very interesting. Typically when China is down, they like to say that this had nothing to do with the iPhone, it's the other products. This time they did not say that. I don't know if we should read into that and take it to mean that maybe it does have to do with the iPhone this time, or maybe they believe that's just common knowledge at this point, given they've said it the past 2 or 3 quarters prior to this one. So overall, pretty good quarter for Apple, beating across the board, growing 5%. They seem to have grown a little bit more than they actually anticipated when they guided 90 days ago, or in the previous quarter. But certainly, overall, solid picture for them.
Let's take a listen to what Tim Cook had to say about China.
During the quarter, I should say also that iPad returned to growth in Greater China as it did around the world. And so we continue to be confident in the long-term opportunity in China. I don't know how every chapter of the book reads, but we're very confident in the long term.
And Mark, how much will the new iPhone help in this current quarter?
Yeah, that's an interesting question. So Apple Intelligence is really the big upgrade on the iPhone that they're trying to sell this year. They talked about AI so much on this call. I haven't heard them talk about AI so much since their developers conference in June or maybe ever. And certainly AI is going to play a big part of this. But in China particularly, Apple Intelligence is not going to be available there until later. We don't know exactly when. Maybe it's next year, maybe the year after, maybe never. So certainly that's something that needs to be addressed. In terms of other features that the iPhone 16 will bring this year, on the Pro models, you'll have slightly bigger screens, you'll have much faster A18 Pro processors, you're also going to have a new camera button. It's sort of a DSLR button on the right top or on the right side of the phone. It's on the top if you're holding it in landscape mode. Maybe that will spur upgrades. I don't anticipate this being a super cycle. You'll notice that in Apple's guidance, Luca Maestri, the CFO, he didn't say anything about the iPhone. Which lends me to believe that it's probably going to be in line from a year ago, so we're not going to see iPhone growth on an annual basis. It'll be sort of stagnant, which given the economic uncertainty right now, given the challenges happening in China, that's not necessarily bad news.
Bloomberg technology reporter Mark Gurman there with the latest on Apple. And of course, we're watching Intel shares as well, plunging in late trade after missing revenue estimates and saying it will cut 15% of jobs. Bloomberg Intelligence senior semiconductor analyst Kunjat Shrabani joins us now for more on this, and they're even suspending dividend payments. It's a really big fall for this massive company.
Yeah, I mean, it was a tough night for them. It basically brought most of their struggles and pain points out together in the same print. On the revenue side, they missed across the board in the current quarter, in the guide. The surprising thing there, or the concerning thing there, is their peer, their x86 peer, and their other peers are showing good, strong second half performance in most of the areas versus them. They are lagging behind. So suggest the share loss story continues. The margins were hit really hard as right now, as they're getting ready to get to the Intel 18A, they have had to outsource their manufacturing for leading edge nodes and accelerating the AI PC roadmap. They're seeing a lot more high costs. So dealing with this sort of a rock and hard place where they're investing for future, but at the same time are seeing a lot of bleeding happening right now. I think the job cut, and more importantly, the dividend suspension was sort of a last Hail Mary call here to save grace, because they kind of know, like, the outcome, at least the outlook, at least for the next few quarters, doesn't look that gloomy.
Past that pain, though, the leadership still seems quite optimistic that they're doing what's necessary to eventually catch up and surpass their competitors, right? Does it look like that to you?
I mean, I would say they don't have any other way out. Our concern is, I think, in the recent years, we have seen this behavior a couple of times, so I don't know how much confident investors will have. I don't know how many times you can hit the reset button and give that confidence back, but let's see how it goes.
A Bloomberg Intelligence senior semiconductor analyst Kunjat Shrabani there on Intel. Let's bring in Pooja Malik, is a partner at Nipun Capital. And Pooja, of course, front and center has been this tech sell-off, and I guess the losing of patience we're seeing from investors more broadly, right? Do you think this continues? Have any of the numbers from really these companies across the tech space been enough to potentially, bring back another wave of gains?
Yeah, we're seeing this huge bifurcation in tech earnings where companies that are more exposed to consumer are getting hit harder versus companies that are gaining from AI spend are going up. And you saw the Microsoft earnings coming yesterday where it wasn't so great for Microsoft, but the fact that they were spending more on AI was a big upswing for NVIDIA, stock being up 13% on a day, which is a really big number for such a mega cap stock. So I think that bifurcation in earnings that we're seeing is something that's likely to continue across the board, where the big AI spend may not be paying off as yet in terms of ROI, but the AI companies that are benefiting from it are continuing to do well.
So within that bifurcation, where would you be adding positions at this point?
For us, actually, we're not adding in AI and tech anymore. We think that expectations are really stretched. And even for the hardware companies, that they might continue to grow, but for them to be raising guidance and beating estimates looks tough. So at this point, we are looking beyond tech and looking again at strong cash flows, strong dividend yielding companies, even in industrials, in healthcare specifically.
And you're not the only one, right? We have seen more investors veering towards cyclicals, towards other parts of the market that haven't been so bid up, especially, but we haven't really seen that sort of a trend when it comes to Asia. What will be the drivers in the second half?
You're exactly right. We haven't seen that kind of trend in Asia as we saw in the US, where in the US in July, we saw a big rotation away from tech into small cap, cyclicals, industrials. Versus in Asia, yes, tech did give back, the momentum trade gave back significantly, but we didn't see sort of the small cap industrial cyclical rally as yet. In Asia, what we're still seeing is a focus on cash flow, a focus on dividend yield. But to answer your question more specifically in terms of the themes for second half of the year, there are a couple of big points to watch out for. First, of course, is the US Fed decision to cut rates, and that will have a differential impact across Asia, and we can talk more about that. The second is going to be the US election, and specifically the implications for the dollar and for US tariffs. I think that's going to have a big impact on Asia for the rest of the year also.
You're still constructive on Chinese banks. Why?
Yes, and you remember we had this conversation last year, maybe in November, where we as a firm have been constructive within China on Chinese banks and on Chinese exporters. The rationale for the banks really just has to do with government and policy support. The big negative for the banks was, of course, the loans outstanding to the property sector, the write-offs they would have to take. And a lot of that has happened, but that is happening at a slow pace. And while that's happening, the government support for these banks and financials is outweighing the losses from the write-offs. And so if you look year to date, Chinese banks have outperformed the market by over 10%. And even though Chinese equities broadly continue to struggle, and they have been struggling for a whole variety of issues, including property, including Trump trades, tariffs, Chinese banks, Chinese financials, Chinese state-owned enterprises have done very well. And that's a trade that has worked well for us.
Pooja, what are your views when it comes to further gains in India? Because obviously it's been well stated the valuations across this market, but it really does seem like the optimism has returned following those post-election jitters.
You're exactly right. The optimism has returned. There's still a lot to go in terms of fundamentals and earnings because the China Plus One strategy has been a big driver of growth in India. And so in India, yes, it's a very expensive market. And I think the key there is going to be corporate earnings. GDP growth is still strong, being propelled by government policy. That was the key thing that the elections reaffirmed was continuity in government policy, infrastructure spend. So we expect GDP growth to continue. And the question there in India is, are earnings going to keep growing at the rate that they have been growing the past couple of years? So we know they're going to keep growing. The question is, do companies still have room to keep raising estimates and to keep upping guidance? And that doesn't seem to be the case in this recent earnings season in India. Companies did meet forecasts, but they didn't beat strongly, and they're not raising estimates anymore. So that's the key thing in India to watch out for is the trajectory of corporate earnings.
Property developers in the Middle East are also one sector that you're constructive on as well. Broadly across the region, and I guess this is kind of, broadly across all markets, how big is the weight of geopolitical risk right now?
Geopolitical risk definitely hangs over all of Middle East. And as you've seen the last 2 weeks, tensions have escalated in the region. Having said that, the biggest market in the Middle East is still Saudi Arabia. And Saudi Arabia, I think, is a little bit less exposed than smaller markets like Turkey or some Kuwait or some of the other markets there. Within Saudi, the long-term structural trend is positive because of their big vision to grow GDP and to diversify and grow non-oil GDP. So again, we're seeing a big fiscal push towards infrastructure growth, and property developers are taking advantage of that. And the second big structural trend in Saudi is demographics, which also favors the property sector. So between the government-driven push for infrastructure growth, attracting foreign investors, foreign tourists, as well as demographics, Middle East property we see as a continuing long-term play.
Pooja Malik, partner at Nipun Capital, there with the latest on her views on the markets. And we continue to monitor the situation in Venezuela as we're getting breaking news out of the U.S. And Foreign Secretary Antony Blinken now releasing a statement on the election that we saw on July 28th in Venezuela, is saying that it's clear to the U.S. that Edmundo Gonzalez won the most votes in the election over the weekend. Remember, he was the stand-in candidate for the Venezuelan opposition leader Maria Corina Machado, who wasn't allowed to run. But then the Venezuelan Electoral Council certified Nicolas Maduro as the president-elect right away. We have seen protests across Venezuela from the results. We are now hearing from the opposition leader Machado calling for nationwide demonstrations on Saturday, again emphasizing that Gonzalez was the rightful winner. We're getting the latest statement coming from the United States saying that it's clear to Washington that Gonzalez won the most votes in the weekend election, saying that the Maduro-controlled National Electoral Council's rapid declaration of him as the winner came with no supporting evidence. Coming up on the Asia trade, we'll get the global tech outlook as well with Third Bridge as the latest earnings underwhelm investors. Plus, we'll talk market strategy with Julius, Baer and CLSA after a busy week of earnings and central bank decisions. This is Bloomberg. Take a look at how futures are trading at the moment, because we saw those big gyrations overnight with stocks falling. Swings across asset markets are widening. We continue to see investors struggle to really review the economy and the earnings season as well. So the VIX now closing at the highest level since April. We, of course, saw the latest haven trade towards treasuries after already seeing their best month this year. The 10-year yield is below that 4% level for the first time since February. When it came to the U.S. dollar, we saw a little bit of strength, but of course we also had the other side of the trade when we had the pound also falling after the Bank of England cut rates and signaled further caution ahead. It's all about really central banks, right? And what the data is telling policymakers right now. Investors watching the U.S. jobs print due Friday after initial jobless claims jumped to the highest level in almost a year. Our global economics correspondent Enda Curran joins us now with the latest. And Enda, it was really interesting to hear Chair Powell talk about really risks on both sides when it comes to the Fed's dual mandate after just focusing on inflation for the past couple of years. So what are we seeing in the labor market right now?
I think the focus has switched to jobs. You mentioned jobless claims moving to that one-year high today, about 250,000 odd, higher than expected. Within that, pockets of softness in places like Missouri and Michigan. Now, there's some seasonality there linked to the school holidays and the retooling of auto plants. But nonetheless, those jobless claims data, coupled with data earlier this week pointing to softening wage growth overall, and tomorrow we're expecting a payrolls number which is probably going to point towards, even though the unemployment rate is going to hold steady around 4.1%, there's going to be a lot of scrutiny to see where the weakness is under the hood of the jobs market. In recent months, for example, the manufacturing sector have been cutting jobs. A lot of the employment has been driven by the government sector and healthcare sector. So the jobs market overall is still robust. Unemployment is low, but as you mentioned, it is softening. The Fed have acknowledged that, and they've pointed to whatever happens in the jobs market over the months ahead as being critical now for where interest rates go next.
What are the expectations now looking at the Fed and what they're likely to do when you take a look at the market?
I think the expectations kind of lit up after Chairman Powell's comments this week that a September cut could be on the table. Traders are betting on around 3 cuts of 25 basis points this year, so basically a cut in each of the remaining Fed meetings. And now there are plenty of those who will say that's probably too much given the overall strength of the economy. But the big question, as we're just talking about here, is what happens in the jobs market. If it broadly continues along its current trajectory of softening but at a fairly steady pace, well then that underscores the whole soft landing narrative, doesn't put that much pressure on the Fed to respond. But if we do start to see a faster deterioration than expected, for example, that big Intel announcement earlier today, even though that's quite industry specific, nonetheless, people are a bit wary now and are keeping out for announcements like that. If the jobs market starts to weaken quicker than expected, I think you'll see, though, a lot of scrutiny come on when the Fed will cut, not just in September, but in the months after, heading into the year end as well.
And then what is the Bank of England seeing right now that they're signaling even further cuts?
Well, it's a bit like the Fed. What the Bank of England did was a fairly reluctant interest rate cut. The vote was 5-4, fairly modest move. And the signalling from the Bank of England was that they said, we're not telling you where we're going with rates next because we're going to take this month by month. They're going to be watching the data. They're obviously not convinced the inflation story is over. Pockets of services sector inflation as well. Kind of a similar story in some respects to the US. The ECB also sending similar signals. All of these central banks are at a point where they want to be able to ease. They know there's some pressure on their economy because of the high cost of borrowing right now, but they just don't want to do another Arthur Burns and make the all critical policy error of moving too soon, too fast. That's what they're nervous about. That was the message from the Bank of England today, and I think it was the same message from the Fed earlier this week also.
Our global economics correspondent Enda Karan there, and we do have much more ahead on the Asia trade. This is Bloomberg. The latest from the corporate front now, and OCBC has reported a second quarter earnings beat as a strong haul in trading and wealth fees helped bolster tepid lending income. Southeast Asia's second largest lender says net income increased 14% to $1.4 billion. CEO Helen Wong said the lender is, quote, firmly on track to meet this year's targets. Adani Enterprises reported strong first quarter profit boosted by solid revenues at its airports and mining businesses. The flagship unit of the Adani Group says net income reached over $170 million, marking a 115% jump from a year before. Adani's empire has been regaining lost ground after battling a scathing short seller attack last year. More to come here on the Asia Trade. This is Bloomberg. This is the Asia Trade, about 30 minutes away from the major market opens this Friday. Here are the top stories that you need to know. Apple sales decline in China is overshadowing generally upbeat results that exceeded estimates. Revenue from Greater China fell 6.5% last quarter, rekindling fears that the company is losing ground in one of its most important markets. Intel shares are getting hammered in late trading after a barrage of bad news, including a grim forecast and plans to slash 15,000 jobs, the latest signs that it's struggling to compete in the AI era. Asian stocks are facing a sell-off too after weak economic data from the US sent investors flocking to bonds ahead of Friday's jobs reports. We are now seeing markets fully pricing in 3 Fed rate cuts this year, Shery.
Yeah, take a look at how the after-hour session is shaping up for these tech giants that just reported earnings, because we saw Intel disappointing investors with revenue missing estimates, not to mention that they announced cuts to jobs, not to mention the suspension of their dividend. Amazon profit forecast also disappointing, although their cloud unit jumped, and Apple continues to gain ground in the after-hour session, up 0.7% after revenue topped estimates. Let's bring in Scott Kessler, global TMT sector lead at Third Bridge. Scott, great to have you with us. It was really interesting to hear Apple's earnings call today, because it was really about the company trying to talk about Apple Intelligence as much as possible. Give us your takeaway from these results.
Thanks a lot. So my takeaway Well, there are a number of takeaways. I think first and foremost is that I think expectations were pretty measured going into the print. I think Apple made it a point to provide kind of indications that this, for good reason, would hardly be a blowout quarter. Obviously, we're heading into an upgrade cycle, so by definition, you're going to have people waiting to make purchases until new product is available for ordering and using and things like that. So I think that's first and foremost. I think secondly, by and large, the company seems to have exceeded forecasts across most of the key kind of metrics that people pay most attention to, but they didn't necessarily exceed those forecasts significantly in any case. And that's kind of a hallmark of a company that guides conservatively and executes well. And I think people would define Apple as that kind of company. And then the third point dovetails with what you just said, which is I think a lot of eyes are on and will be on Apple Intelligence and performance in China. I think performance in China still remains kind of an overhang when it comes to the near term, and over the more intermediate term, I think there still are a fair number of questions about interest and excitement and, yes, adoption when it comes to Apple Intelligence.
What's going on in China right now for Apple, and how can they turn things around?
So I think a couple different things really are going on. How much time do we have to talk about it? I think in some, I think Apple has had a hard time. They've had a hard time because they sell a premium product. I think there are a lot of local competitors that have been eating away at market share. I think it's forced Apple to reevaluate pricing strategies, and they've implemented some discounting, which is very unusual for Apple, but they do want to try to claw back some of the market share that they've ceded over the last couple of quarters. It's unclear whether market conditions are going to change significantly, whether the iPhone 16 or the ultimate release of Apple Intelligence will really make much of a difference. We'll see about that, but it seems like they're kind of swimming against the current when it comes to China. And although it seems like things aren't getting notably worse, they're not quite where they want to be. I think revenues from Greater China declined maybe 6.5%, and that's better than where we've been, I'd say, in prior quarters, but probably still not seen as satisfactory to the company at this point.
Scott, we're going to have to wait a little bit longer to kind of work out the implications of the AI side of things in terms of Apple's features, right? Are you concerned, given the prevailing mood of investors in tech at the moment, that that will be disappointing in terms of how they plan to translate that into sales and revenue?
It's something that, frankly, we've been kind of thinking and talking about for a few quarters at this point. We're consistently hearing from experts that we speak to about not necessarily kind of interest as it pertains to AI, whether it's consumer or commercial. It's really about the ability and inclination for monetization. Apple has taken a very different approach than a lot of software companies, for example, that have signaled that they're looking to charge substantial premiums for Copilot type functionality within significant software platforms and applications. In Apple's case, it seems like they're hoping that Apple Intelligence is going to prompt purchases of and upgrades to the newest devices, because older devices won't be able to use Apple Intelligence. I'm not sure Apple Intelligence is going to move the needle, at least over the near term. And that's an open question where I think there are going to be a lot of kind of back and forth comments, but nothing is assured at this point. And I think there are even some questions about how and when Apple Intelligence not only is rolled out, but rolled out on a more global basis. And we talked about China and the challenges there. I think there are some pretty substantial questions about if and when Apple Intelligence is made available to users there.
It's not just Apple, right? It had been such a bumpy earnings season for big tech. We saw that again with Amazon to an even worse extent, obviously, with the Intel story as well. Is this a sense of sort of how much investors have gotten their hopes up so high, sort of coming home to roost at this point, or are these kind of more individual structural issues with each company's business?
It's an interesting question. I think, look, investors are always looking for indications of kind of broader themes across whether it's sectors or specific industries or what have you. I'm not sure that we're able to kind of divine those at this point. I do think that there is tremendous spending when it comes to AI in terms of capacity and capabilities. But I go back to what I said earlier, which is the proof is in the pudding when we see real monetization. And I think that's kind of been less kind of significant and slower in materializing than many may have expected. It doesn't mean that we won't see that sooner rather than later, but I do think that people are starting to ask more direct and pointed questions about kind of what happens next. That being said, I think we're seeing a lot of point and counterpoint in the markets over the last, say, week or two of quarterly results. You see Alphabet reporting results, and I think people have had questions about demand and execution, but then you see Meta reporting results, and it seems like they were firing on all cylinders. I think there are some questions, though, about where we go next. I think macro has a lot to do with it. We're starting to see some indications about kind of weakening economic conditions and the possibility that you could see interest rates actually ticking down with kind of government interests taking actions for the first time in a while to kind of stimulate some growth in that way. So there are a number of factors here. I don't think there are any particular themes, but I do think what you highlighted is an important kind of factor to consider at this point.
Is the economic theme what's happening right now with Amazon, where the stock is down more than 7% in the after-hour session? Because we saw that jump in their cloud unit, but at the same time, their traditional e-commerce business saw some weakness.
Amazon is really fascinating, and my team and I focus primarily on AWS as well as the advertising business. And I'll tell you, if you look over the last couple of quarters, what we've seen from Amazon, at least from those two businesses, is AWS has been a little touch and go. It's been a little mixed. And now we see what you alluded to, which I think were, pretty strong results when you consider what we've seen from Amazon over the last couple of quarters and what expectations were. 19% growth from AWS. I think, especially given what we've seen from the primary competitors, I think that is something that people are going to look to as, really one of the strong suits, one of the highlights of the Q2 results. On the other hand, the advertising business, which has really been a standout over the last couple of quarters, I think disappointed some investors. And that you add to the fact that e-commerce, not just from Amazon, but frankly, some other players over the last couple of days in particular, I think causes one to wonder about kind of the broad-based strength there. That being said, when I think Meta talked about the strength of their advertising results, I think they led with indicating that e-commerce and direct response advertising, they were really the primary driver of not just the growth, but the outperformance when it comes to the company's revenues. So there are really some interesting kind of differentiated data points that are making it hard to really understand if we're talking about more macro themes or, as you alluded to, some companies performing better than others simply because of strategy and execution.
Scott, really great to have you with us. Scott Kessler, Global TMT Sector Lead at Third Bridge. We do have more ahead on the Asia trade. This is Bloomberg. Russia has freed over a dozen prisoners in the largest such swaps with the US since the Cold War. Among those exchanged were Wall Street Journal reporter Evan Gershkovich, as well as former US Marine Paul Whelan, who has been detained in Russia since 2018. The swap was in exchange for a prized assassin sought by Moscow. Vadim Krasikov was convicted of murder in Germany after gunning down the Chechen leader in Berlin in 2019.
This deal would not have been made possible without our allies. Germany, Poland, Slovenia, Norway, and Turkey, they all stepped up. The deal that made this possible was a feat of diplomacy and friendship. Multiple countries helped get this done. They joined the difficult, complex negotiations at my request, and I personally thank them all again.
For more, let's bring Bloomberg's Michael Heath. And of course, you know, as journalists, it's a huge relief to see Evan released after all this time. Did we have an inkling that this was going to happen? Some extraordinary reporting from Bloomberg News on this too.
Yeah, it's really fascinating stuff. And so it had sort of in recent days that the talk had increased, but in a sense, it was fairly clear that these were hostages almost that were taken by Russia. At the heart of this deal is Putin showing agents abroad that no matter what happens, if they're caught, he will get them out. And taking Evan Gershkovich and the others mentioned is just a bargaining tool, excuse me, in many respects. So from Moscow's perspective, this is a real win. For the West, obviously, you know, seeing these people in prisons in Siberia and these sort of places, I mean, it's a terrible thing, and releasing them is the right thing to do. Sorry, trying to get them out is the right thing to do. But in a sense, what it does show is just how dangerous Russia has become for Western citizens, even journalists, and it's sort of a new descent for Russia that it's got to this stage, because even the Soviet Union really didn't go this path.
It's a lot going on, right, because we're also watching the situation in the Middle East. President Biden has promised Netanyahu new US defensive military deployments. How does this play into what we're seeing at the moment? And I guess there's a sense of kind of bracing for what comes next in this region. Yeah,
definitely. And Netanyahu also said that Israel's on heightened alert. Obviously, we had Hezbollah's leader, Nasrallah, who was saying that this had crossed red lines. I mean, he didn't say this is an act of war, which would really send us into a new level. But there's obviously going to be a fairly serious response from Hezbollah and probably from Iran. I mean, its supreme leader has said that there will be revenge for this. There was some very interesting reporting also from the New York Times in this, which shows that which indicated that the death wasn't from an Israeli missile or a missile. Israel hasn't taken responsibility. They'd actually managed to smuggle in a bomb into this guest house a couple of months ago. So it was a long time in the planning and really quite an extraordinary feat of intelligence in many respects, but the region really is on edge for how this looks. And while President Biden pledged that support to Israel, he also urged them to not go overboard in this situation, to try to ensure that the situation is contained as best as possible.
Bloomberg's Michael Heath there, and really interesting to see, you know, after what has obviously been a few challenging few weeks for the US president, that he's still sort of back in the spotlight when it comes to really showing off his foreign policy expertise, right? There was some, I guess, part of that narrative as he stepped down from his re-election campaign was that perhaps he'd sort of fade into the background in the final few months of his presidency, but clearly he still has some cards to play with this prisoner swap, the complex negotiations that we know went on behind it, not just between the US and Russia, but also several other countries as well. And so, you know, Shery, I think we can kind of call this a pretty undeniable diplomatic coup for the president, who, of course, you know, has constantly gone back to highlighting his foreign policy expertise.
Also drawing a little bit of a contrast to perhaps those diplomatic efforts coming from the Vice President Kamala Harris when it comes to Central American countries and how she has dealt with migration. Now, she was assigned that mandate in 2021, but since then, there's been a lot of criticism about how overambitious that was. And after 3 years, that hasn't really led to a decrease in flows of migrants into the United States. Still, really undeniable when it comes to the surging popularity of the Vice President, right? I mean, the recent election polls are showing more odds that she could really have a chance in the November elections against Donald Trump. But also the fact that we are seeing the Federal Reserve now pointing towards those interest rate cuts have really hit the Trump trade, those so-called trades and strategies that would win from a Trump presidency sort of retreat to the background. We have seen the dollar stagnating, treasuries also rallying, Bitcoin also falling, Heidi.
11 days is kind of all it took to see this change in the narrative, right? It's so interesting. Of course, we still have quite a bit of time ahead when it comes to going into November. So kind of brace yourselves, right? Shery, we're also watching oil as well. We spoke a little bit with Mike about these, you know, the sort of wait and see mode when it comes to the Middle East and what that potential retaliation, if that comes from Iran or its proxies, might look like. Take a look at how this is playing out with oil. We are seeing Brent crude up by just about 1.9%, but interestingly, oil still does look like it's perhaps headed for that fourth weekly decline. The demand concerns when it comes to the US and China really seem to be outweighing the heightened geopolitical risk in the Middle East. So those factory gauge data from both the US and China showing contractions, weakness in manufacturing seems to be the biggest issue here. We did see that jump in the middle of the week after we saw the killing of the Hamas and Hezbollah leaders. That sort of led to some concerns over the geopolitical tensions in the Middle East and how that could really affect production as well. But this still looking like the longest losing streak of weekly declines, that is, for oil since December. We do have much more ahead on the Asia trade. This is Bloomberg. This is the Asia trade. Some of the latest earnings reports that we're following. Amazon shares dropping in late trading after a projected profit that missed Wall Street estimates. It sees operating income this quarter of up to $15 billion. Analysts on average were looking for $15.7 billion. The company has told investors that profits for now will be taking a back seat to heavy spending on artificial intelligence. Norinchukin Bank posted a $2.75 billion loss in the first quarter after making bad bets on interest rates. The Japanese agricultural lender is unwinding about $67 billion of US and European government bonds this fiscal year. Nochu also says it's planning to raise more capital from member cooperatives to rebalance its investment portfolio. Shery.
And Heidi, with Japan's earnings season in full swing, investors watching the quarterly report and fiscal guidance of Nintendo due later today. Our technology editor Mayumi Negishi joins us now for a preview. And Mayumi, we know that Nintendo has been facing some challenges. What are we expecting today?
Well, so consensus estimates are for Nintendo to report one of their biggest profit slides in years, well, in part because gamers are just holding off on buying games as they wait for the new console to replace the Switch, and also because last year earnings got such a big boost from The Legend of Zelda and also the Super Mario Brothers movie. Well, Nintendo's done a kind of an incredible job extending the life and momentum of the Switch, but, you know, thanks in part to lockdown demand, but it's still a 7-year-old console. So, you know, people are ready for the next thing. Sony and Microsoft have come out with much more powerful consoles on the market. There's so much competition online, from mobile. So attention is on any hints at all that Nintendo executives might give about details of the new console. Though, you know, to be frank, they'll probably want to save a lot of that for like a big, either the Gamescom in Cologne later this month or the Tokyo Game Show next month. But yeah, anything that they say will be market moving if it's indicative of when that next Switch is going to hit the markets.
Are there also concerns about the weakness when it comes to content pipeline?
Oh yeah, absolutely. That's sort of a hard question to ask because there's it really depends on the timing of when that next console is going to land. I mean, Nintendo's content is still running strong. The problem is whether the games that are for the current Switch, whether they'll be playable on the next Switch. So, gamers will want to hold off to see whether that whether the games that they buy this year will be playable on the new console. So it's not so much how strong the content. The content is very strong. Nintendo's been saying they'd want to put out more movies, more ways to capitalize on that demand.
Mayumi Negisha, our tech editor there, with what to expect from Nintendo as we continue to watch the earnings season unfold here in Japan. We'll be watching some of the reaction after we saw Mitsubishi UFJ seeing its first quarter net income beating estimates. We're also expecting to see more action in Toyota with operating income missing estimate. Nippon Steel boosted their full-year business profit forecast, and we'll be also watching Daiwa. Its profit rose less than analysts had expected. The market opens in Tokyo, Seoul, and Sydney are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens after the sell-off that we saw in U.S. stocks overnight, Heidi. It's really interesting to see that change in narrative because when we got the dovishness coming from the Fed, there was a lot of exuberance that perhaps we could see more gains in the markets. But with some disappointing eco data now, we saw that rally in treasuries.
The psychology of these markets is so fascinating at the moment, right? And really pretty fragile because we've gone from, as you say, that hopefulness of easy and perhaps that translating into further gains across equity markets to now these concerns about the global economy. And certainly you're seeing that being reflected in rates markets, right? These expectations of 3 cuts now from the Fed before the end of the year.
Yeah, and of course, we are in the thick of earnings season as well, so we have to digest all of those numbers, especially from mega cap techs in the U.S. Not to mention that here in Japan, we're also expecting results from the likes of Nintendo, and some of that mixed bag of corporate earnings has also weighed on the markets with that pressure on the most valuable company, Toyota, for example. We're seeing the Nikkei and the Topics losing ground at the open, perhaps not surprising, and really following that worst day since 2020 that we saw on that rally in the Japanese yen, which continues to strengthen past that 150 per US dollar level. And take a look at how Korea is coming online because we also have those CPI numbers broadly in line with estimates, although the year-on-year number surprised slightly to the upside. What that means for the BOK is a key question. Bloomberg Economics expecting a rate cut come October. We're seeing the Kospi losing more than 2% at the moment and some weakness on the Korean won, Heidi.
Taking a look at the start of the staggered session here in Sydney, of course, we have seen sort of some new highs when it comes to Australian equities this week, right? So perhaps unsurprising, we're seeing a little bit of a breather, not too much though, 0.3% when it comes to trading in just the first sort of couple of minutes or so as we come online. We're also watching the Aussie dollar, a little bit on the back foot, 64.90 at this point. It has shown kind of surprising resilience given just kind of the downside that we've seen in China markets as well as the sell-off across metals and commodities prices there as well, right? And of course, watching treasuries as we see this sort of renewed haven trade that has been playing out so far this week, and some of that, being seen clearly when it comes to the biggest, the gain on that Fed view, and some of that sort of repricing there across the board, Shery.
Yeah, and take a look at how some of these Asian suppliers to Apple are trading at the open, because the company topped estimates when it came to their revenue number, despite the fact that sales, though, remain sluggish in China. So we had a return to revenue growth last quarter, lifted by the arrival of the new iPads, but at the same time, the caveat being that those sales in China remain sluggish. Let's bring in Mark Gurman for a look at Apple's earnings. He's our technology reporter. So, Mark, what stood out to you?
Definitely what stood out to me was a nice beat across every product category and in services, right? Services topping $24 billion. That's an all-time record, not for the quarter, but of any quarter ever for Apple. But with the good comes the bad. The iPhone declined 1% on an annual basis. Apple is pushing the idea that on a constant currency basis, the iPhone actually would have grown. But that's not necessarily how most people look at these things. So it's a slight decline there. Could have been worse, could have been better. And then Greater China continues to have its issues, down $1 billion on an annual basis and missing Wall Street expectations. Certainly we would have expected a better rebound in China. Apple is saying, though, that the performance in the second half of the year so far is better than what they saw in the first half of the year. So all things considered, a pretty decent quarter for Apple. Of course, we're going to be looking ahead. We're looking for new types of innovation at Apple, looking to see how they could roll out Apple Intelligence over the next year and see what the consumer response is to that. We're looking at other new types of Apple devices in the future, foldables, new types of iPads, new types of iPhones. What are the breakthrough new product categories? Can they turn the Vision Pro into a hit like the iPhone, iPad, iPod, and Mac before it? The Apple Watch as well, to a big extent. How can they improve that product? So, my questions about Apple aren't necessarily about this quarter. Everything was good, but it's really where's the innovation at in the future?
It's interesting you mentioned Apple Intelligence and the sort of broader mood music for investors on investing in AI has not been great over the past sort of couple of weeks or so, right? Is there a sense that might be a disappointment when Apple actually comes through? Do we know how they plan to monetize this and translate this into better sales and revenue?
It's actually kind of funny. I mean, it feels like Apple realized several months ago that their stock price is going to be heavily influenced by the use of buzzwords like artificial intelligence, right? And throwing out generative AI and machine learning. And so they're throwing out all these terms. But in practice, the product that they showed in June is not something that's going to roll out in full force until later next year, right? You need more languages, more regions, the ChatGPT integration, which, by the way, they had to do because they don't have their own chatbot of that ilk like many of its competitors do. That's coming before the end of this calendar year. And you can see, based on the questions that analysts are asking on the call, they're all in on this idea of AI and what that can do for the stock price, what they could do for their estimates of where Apple's share price will go. Me personally, I don't believe this year that Apple Intelligence should or will have a meaningful impact on iPhone sales. I think that is something that's going to happen over the long arc of time. As people look to upgrade their devices, then they'll realize they'll be able to get these versions with Apple Intelligence. But that's not something that should, based on the initial capabilities, drive phone purchases this fall.
So can we expect the old drivers, less exciting parts of the business like services, to still drive that growth?
Yeah, they're saying services is going to grow another double digits on an annual basis like it has the past few quarters over 2024 in the current fourth quarter. I think the Apple Watch and AirPods, they're both due for a bit of a resurgence. Apple kept saying that they have a tough compare in the current quarter for wearables because of the Apple Watch Ultra and AirPods Pro 2nd Gen, which, by the way, launched in September of 2022. Right, a year and a half ago, and they're still facing tough compares against that, which to me doesn't necessarily add up, but that's neither here nor there. There'll be bigger updates to both the AirPods and the watches this fall, and so that is going to create a meaningful boost for that category, I'm sure.
Our Bloomberg technology reporter with the latest there, Mark Gurman on Apple, and taking a look at the topics at the moment, because we have seen just in the early part of the session that fall of 10% from that July peak, and this really coming as we've seen quite a bit of downside pressure on Japanese equities. Right, this week have seen the biggest tumble since 2020. Exporters in particular have been feeling the pain on the really sharp rally that we've seen in the yen, and of course the BOJ's rate hike is dragging down the likes of real estate stocks as well. The topic's looking like it's seeing pretty broad-based declines again in the early part of the session. Let's bring in with some analysis Mark Matthews, Head of Asia Research at Julius Baer. So, Mark, I'm curious as to how you'd sort of characterise the mood music across markets at the moment, because there certainly are a lot of cross currents going on, from the tech sell-off, the existential concerns over when we see returns over AI, to this very significant juncture for global central banks, not to mention geopolitics.
Yes, Heidi, lots going on. And if I would start with the earnings, then overall they're going to be good. They're going to be, in my opinion, double-digit this quarter, probably in the high single digits next quarter, and then back above double-digit for the fourth quarter and the first quarter of next year. So the overall earnings are good. But to your point, and eavesdropping on your conversation with Mark Gurman, there is this big sort of questioning around AI now, and you're kind of darned if you do and darned if you don't, because if you say we're not going to invest in AI, then you'll be seen as not keeping up with the times. You're going to end up like a Kodak or a Blockbuster. But if you do invest a lot in it, then you'll be accused of putting capital at risk in this great unknown. So I think the way to look at it simplistically is AI for real or not? Is it, you can think of a few kind of failed technology stories over the last 10 years, like driverless cars in cars, or robo-finance in finance, and they didn't end up being a big thing. And I just don't think AI will be like that. I think it will be more like the internet. And so even if you overinvest now, you will be vindicated by having done that in the future, because it is for real. And then with the central banks, you're absolutely right. So the Federal Reserve saying, I think pretty much in no uncertain terms, they're going to start a rate cut cycle next month. And that's, of course, the green light for all the other central banks that have been waiting to follow. And that's a good thing. So I put the two together, very strong earnings growth, albeit some question marks around AI, and an easing cycle in front of us. And I think it's a constructive backdrop.
You talk about this idea of eventually being vindicated if over-invested. Would that be the position that you continue to take on AI? Like, would you be sort of adding to that at the moment? Or is it time for a bit of pause to kind of wait and see?
I don't want to pretend that we always get things right, because we certainly don't. But I will say that we did hedge our exposure to U.S. technology stocks by buying puts in the technology ETFs. I believe it was on the 12th of July. And so we did that because we felt that the market was due for a pullback. In fact, the last 30 years, the 3 years that had done as well for the S&P by mid-July, all experienced corrections in the remainder of July and throughout August, and in one actually in 1998, it lasted up until October. But then they recovered and they ended the year at new highs. And so we actually bought some protection on the idea that this technology correction would come, and it has come, but I don't think it's really been severe enough to warrant buying on weakness just yet.
And Mark, we could see actually a correction when it comes to Japanese equities if we do end up at these levels, down 10% from its peak. Where do you see equities going if we continue to see that it's rallying the Japanese yen? And I guess the question is, where do you see the yen going, given what the BOJ is doing and what the Fed is doing?
Yes, we were all caught off guard by that 20 basis point increase from the Bank of Japan on Monday, and certainly wasn't anticipated by the consensus. I'm torn, really, on how to approach the yen, because on the one hand, it's still a incredibly undervalued currency, and as simple as it sounds, the Economist Big Mac Index, a Big Mac in Tokyo is about the same price as a Big Mac in Ho Chi Minh City. People in Japan make 10 times more than people in Vietnam. Doesn't make sense. But on the other hand, I doubt the BOJ is going to be, coming out with a whole bunch more rate hikes having done this. I think they've got the yen back to where they want it to be. So I would say on balance, for lack of a better way of saying it, probably sideways for the yen, and then I think that the Japanese equity markets can recover, because it is true that Japanese corporates hedge, but they don't hedge, 10 years out. So there is actually some logic to the idea that stocks should go down when the yen goes up.
Also, perhaps, are you factoring in the fact that you're not seeing as many rate cuts coming from the Fed as the market see, fully pricing in 3 cuts? I see that you're thinking September and December for Fed rate cuts this year. So what are you making of the gyrations that we're seeing in market sentiment? Earlier this week, there was so much exuberance because we thought, yes, the Fed is easing, but now you get some disappointing economic data and you're thinking perhaps we're headed into a recession and a hard landing.
If you're referring to that ISM manufacturing PMI that came out last night for the month of July, it was not recessionary. The ISM itself says that you need to get down to 42.5 for a prolonged period of time in the manufacturing PMI for it to indicate a contracting economy. And the number was 46.8. And I would just point out for most of 2023, it was around 46, and there was no recession. So we don't see a recession on the horizon. We're forecasting 2.1% GDP growth for the United States next year. But of course, when the market goes down, people look for reasons, and then they find a bunch of reasons. I think the biggest one now is this whole questioning of the investments going into artificial intelligence. And if I just look back at those 3 years that the S&P had done as well by mid-July as it has done this year, in other words, about 16%, then I could easily see us continuing to digest some of these gains, pull back a little, at least until the end of this month. But then I think the news is still powerful enough to take us into a year-end rally to end at new highs.
Mark, I actually wanted to quickly get you to our question of the day, which asks how long before the Fed rate hits 4%, right? And this, as we see this, kind of gyration in the market that now sees bad economic news as being perhaps bad news for companies as well. This idea that maybe the inaction from the Fed is jeopardizing the prospects of a soft landing, do you think that they'll end up getting to 4% quicker than expected?
No, I don't think so. And just coming back to that manufacturing data point, because it seemed to cause a lot of consternation last night. Manufacturing is less than 10% of the U.S. economy. It employs about 8% of the working population. I don't think that's what's going to take the economy into a recession. And since COVID, what's been driving the economy is the service sector. And maybe that's softening a little bit, but not much. I really don't see on the horizon enough signs to tell us a recession is coming. Then again, recessions usually do jump up and surprise us. I think the track record of economists in predicting them is pretty poor. So one could happen, but I don't think one will.
Yeah, I think a lot of people right now are paying closer attention to the SAM rule these days. Mark Matthews, good to have you with us. Head of Asia Research at Julius Baer. We have more ahead. This is Bloomberg. This is the Asia Trade. Here are some of the top stories that we're following from around the world. The U.S. Secretary of State says Venezuelan opposition candidate Edmundo Gonzalez won the most votes in last weekend's disputed presidential elections. Antony Blinken says there's no evidence supporting the victory declaration of President Nicolás Maduro. Opposition leader Maria Corina Machado is calling for nationwide demonstrations on Saturday. In an opinion piece for the Wall Street Journal, Machado says she she's in hiding and in fear for her life. President Biden has spoken with Israeli Prime Minister Benjamin Netanyahu, promising new defensive U.S. military deployments. That's as Israel faces threats to avenge the assassinations of leaders from Iran-backed Hamas and Hezbollah. Tehran buried the Hamas political chief Ismaili Haniyeh on Thursday, while in Beirut, a similar procession was held for a Hezbollah commander killed in the Lebanese capital. Russia has freed over a dozen prisoners in the largest such swaps with the U.S. since the Cold War. Among those exchanged were Wall Street Journal reporter Evan Gershkovich, as well as former U.S. Marine Paul Whelan, who have been detained in Russia since 2018. The swap was in exchange for a prized assassin sought by Moscow. Vadim Krasikov was convicted of murder in Germany after gunning down a Chechen leader in Berlin in 2019.
This deal would not have been made possible without our allies. Germany, Poland, Slovenia, Norway, and Turkey, they all stepped up. The deal that made this possible was a feat of diplomacy and friendship. Friendship. Multiple countries helped get this done. They joined in difficult, complex negotiations at my request, and I personally thank them all again.
Well, let's bring in Bloomberg's Michael Heath, and it's really interesting seeing sort of President Biden still kind of showing that he still has this expertise that can be, clearly used to great result for Evan and the families of those released. But was it surprising at all that this happened?
Well, I'm not sure it's surprising in the sense that the final release, but Biden's efforts are, that you're right, they're really, really impressive. And I think he's going to be remembered as someone who just had such a deft touch when it comes to foreign policy and dealing with these issues. I mean, from a humanitarian perspective, this is terrific news. And coordinating so many countries, Germany didn't really want to release Vadim Krasikov. I mean, he gunned down a Chechen rebel in the middle of Berlin near the Chancellery in 2019. I mean, it was just blatant murder there. And so it took a lot of persuasion, and they basically did it as a gesture of friendship to the US. So that coordinating effort is huge. And part of it was also meant to help release Alexei Navalny, who obviously died before the negotiations could be concluded. So, yeah, I mean, from Biden's perspective, it's really impressive. And he's taken centre stage again, at least briefly, before we sort of switch into full campaign mode. But from the Kremlin side as well, I think that they'd see this as a win, because in many respects, what it shows is they've signalled to their dissidents, etc., that no one's safe anywhere in the world. They'll get them, and they signal to their own agents that they won't leave them in the lurch. They'll find ways to get them out, which makes it very, very dangerous for Western people in Russia now, unfortunately.
There's a lot going on when it comes to geopolitical attentions and things to watch, and that's obviously the sort of the good news and maybe the kind of neatest story that we'll be covering all week. In the meantime, we're still sort of potentially waiting for the next developments in the Middle East. Yeah,
it's a really, really uncertain time there, Heidi. I mean, obviously, since Israel assassinated senior leader of Hezbollah in Beirut, and obviously the political chief of Hamas in Tehran, Iran has vowed that it will retaliate, it will seek vengeance, and Nasrallah, the head of Hezbollah, has also said that this has crossed his red lines, and that they'll be responding to Israel as well. So Israel's really hunkering down, and the question is just how hard will those sides go. I mean, Iran, on one hand, Iran and Hezbollah don't really want a full-scale war with Israel, and potentially the US being drawn in, but they do need to show that the Middle East, that they are strong and that they can do this. So we had President Biden again offering Israel all assistance in terms of trying to protect it from any rocket attacks, etc. But that's very, very hard to do. So everyone's sort of on tenterhooks. How strong will the response be, and then how will Israel react to that? In April, we had sort of a fortunate outcome where Iran sort of flagged what it was going to do. Israel, went for a fairly obscure base in its response, and everyone agreed that was done. But the waiting for this, you can never be certain how it's going to unfold, or an accident occurring or anything. So it's a very, very tense time in an already very, very unstable area.
Yeah, I mean, it's been more than 300 days now since the war between Israel and Hamas started. So what can we expect next in terms of any breakthroughs here?
Well, it's very, very difficult, Shery, because we've obviously had the Hamas negotiator has been assassinated, or one of the senior negotiators there has been assassinated. So that sort of puts back truce talks. But it had looked like it was getting closer, that some sort of deal for a truce and to release these hostages. As you say, it's been 300 days that these people have been in custody. About half of those remaining are understood to have probably died as well. So time is running short in terms of getting these people out, and the assassinations, while while they're very impressive security or intelligence feats, they certainly don't bring the truce negotiations forward at all, and probably raise some resentment there among Hamas especially. So, I mean, the pressure in Israel is growing from those families, but we really just have to wait and see, I think, first how this escalation in terms of Iran and Hezbollah unfolds.
Bloomberg's Michael Heath there on everything on geopolitical tensions, especially across the Middle East, as we continue to watch oil prices at the moment rebounding from that pullback that we saw in the New York session. Of course, this also followed the biggest gain in more than 9 months, given not only the Middle East tensions, but also perhaps more data about a slowing U.S. economy. This is Bloomberg.
Take a look at how European stocks are shaping up as we head into the end of the week. We did have stocks across the region really declining, including the worst performer there in France, the CAC 40, really sliding into contraction territory. A slate of disappointing earnings, that weaker US data really kind of raising broader concerns about global growth. This is Bloomberg. About 30 minutes into trading here in Asia, the top stories that you should know this Friday. Apple sales decline in China is overshadowing generally upbeat results that exceeded estimates. Revenue from Greater China fell 6.5% last quarter, rekindling fears that the company is losing ground in one of its most important markets. Intel shares also getting hammered in late trading after a barrage of bad news, including a grim forecast and plans to slash 15,000 jobs, the latest signs that it's struggling to compete in the AI era. Asian stocks selling off as well after weak US economic data sent investors flocking to bonds ahead of Friday's jobs report. Markets now fully pricing in 3 Fed rate cuts this year, Shery.
And we're seeing that sell-off being replicated here in Japan as well, as we're seeing the Nikkei and the Topics losing ground. But take a look at the Topics, down more than 5% at the moment. If we end at these levels, we would have entered correction territory, down more than 10% from its July peak. We're seeing tech and financials leading the declines on the Nikkei right now, as we're also seeing that gain in the Japanese yen continue to the highest level since March against the US dollar. We also continue to watch some of the reaction from earnings season. We are expecting Nintendo and KDDI to report earnings today. We also had Mitsubishi UFJ, in fact, coming out with a fourth quarter net income that beat the average estimate, but we are seeing the downside together with a broader market right now. Let's bring in Nicholas Smith, Japan strategist at CLSA. Nicholas, good to have you in the Tokyo studio and see you in person.
Good stuff, yeah.
And what a day. I mean, what this excitement and gyration in the markets. I don't want to sound too simple right now, but is it all about the yen's strength when it comes to this huge sell-off in equities?
I think as far as the macro tourists are concerned, yeah, it's all about the yen. And so you can see that Toyota came in 17% above consensus. Well done. Stock goes down 8.5%. Is it forecasting, is this a surprise for anybody? No, it shouldn't be. The company's forecasting 145 yen to the dollar. We're at 149. Look, the whole thing used to be the other way round. We used to have a strong yen used to go with strong topics and strong corporate profits.
When was that?
Well, that happened until the global financial crisis. What changed? Well, the BOJ changed things. It locked long rates at 0. And if you say, well, the yen is a function of the yield differential, and the yield differential is now only a function of US rates, and US rates go up when global growth expectations go up, and Japan is a geared play on global trade, that means that every time global growth picks up, the yen tends to weaken. And then all of these macro tourists say, that was because of the yen. So no, it wasn't. It was because of global growth. And that's the important thing. That's what you need to keep your focus on. So now what we're going to have is they will unwind this problem of locking the yen, and we'll probably go back to the previous situation, to strong yen going with strong corporate profits. But there's a really interesting thing at the moment is people say, the topics is correlated with the yen. So, but you know one thing that's more correlated with the yen? US tech stocks are. Look at NASDAQ, look at the Philly stocks.
Because of the global growth story?
Well, I think there's a real possibility that might be tied into the yen carry trade. This is a beast of a trade. So trillions go into that.
In Mexican pesos,
exactly.
Aussie dollars.
But is it possible that some of the froth from the yen carry trade went into tech stocks? Perfectly possible.
Let me get back to that global growth story, because it's been really interesting to see the narrative also shift this week from exuberance about Fed rate cuts, and now you get disappointing data and you think, oh my gosh, we're going to head into a hard landing. How does that filter through into the Japanese markets?
Well, obviously, if we're going into a global recession, we've all got problems. There's no question about that. But are the leading indicators telling us that? Is PMIs telling us that? Absolutely not. So I think things are fine, but let's concentrate on the main thing. Is that yes, the US is likely to be cutting rates, but Japan's hiking them. That's a positive story. That's telling you that things are coming out of that long dark tunnel that Japan's been in for decades. That's what we ought to be focusing on. So if I'm right about the effect of yen on profits, which the evidence is very strong, it doesn't have that much effect, then we could go into a period where we've got pretty decent profits, because remember, guidance is getting revised up, consensus is getting revised up, and for a company to revise guidance this early in the fiscal year, that's positive. So we could have decent profits and a strong yen, which is a pain trade for people, dollar-based investors that aren't invested in the Japanese market, because you could get the yen.
Is it going to help consumption? Does it help sort of the exposure for domestic households and consumers?
That is an absolutely great question. So, first of all, remember the presentation from the Deputy Governor of the Bank of Japan at the beginning of December, and he was showing you the absolute collapse of net interest income for households as a result of very low interest rates. So they have, Granny has basically been mugged in a back alley and her purse has been stolen. But on the other side, what is the reason that consumption has been weak? Well, it's obvious. Anyone who lives here knows it's the cost of living crisis, which is crushing the support rates for politicians at the moment. And so we've also got a situation where we've had the biggest wage increases for 33 years, and yet that's been overwhelmed by rising costs. And so I think you should be saying, j'accuse. BOJ, that was your problem. You did that. And now we're getting a bit of an unwinding of it, as it perhaps will bring down inflation a little bit, and the consumer will have more money to spend.
So this correction is short-lived, you believe, because ultimately the fundamentals are looking pretty good to you?
I think the fundamentals are just fine. Earnings are getting revised up. Most companies have put 145 into their forecast. But we have a global wipeout going on. People are panicking. People are saying, I don't know what's going on in the US election cycle. I don't know whether Trump is good for profits or bad for profits. I mean, obviously, if he's going to start off a global trade war by putting 60 to 100% on imports from China and 10% on everyone else, and you look at Smoot-Hawley in the 30s and say, that's not a good thing. Or on the other hand, you look at 2016 when he won the election, and what moved? Well, financials surged along with a grab bag of deep cyclicals. So he was good for the economy, or perceived to be at the time. So which of the two is it? I think people are confused at the moment.
This idea right now that we're seeing incredible confidence in the Japanese markets, especially because we are seeing the changes in corporate governance, especially because some of the factors that you mentioned right now. How much of that is that at risk if you don't see Japanese people feeling happier about the economy? Because the confidence out there, being on the ground now for about 2 months, seems to be pretty negative, especially because, obviously, as you said, Granny has been mugged in the back alley.
Well, yeah, I mean, I think the Japanese are very like the English. They like to moan. And so, but it is true that there's been a dreadful hit to consumer confidence just because prices have gone up so much. And finally, someone's woken up the BOJ, which is great. But I think generally things are not that bad. I think that companies are getting to a point where they're starting to think about raising their capex, for example. So I don't think that we're in a position where everyone says batten down the hatches, the economy is going to be horrible. I don't think it's that way.
Does it matter that a lot of these Japanese companies operate overseas, that a lot of that money is actually being funneled into overseas businesses, also that they don't focus so much on selling to the domestic market?
Obviously, Japan offshored very substantially, and with that big run-up in the real effective exchange rate up until 1995, they said, we're out of here. And they're also getting out of Japan to get around tariff and non-tariff barriers in other countries. I think it has been absolutely right that companies have been investing overseas and concentrating overseas until quite recently. And you were mentioning corporate governance. Obviously, they've been sitting on vast amounts of cash, real estate, and other assets. Well, that was sensible because we were in deflation at the time. So the right thing to do in deflation is dangle your feet over a lot of cash, and your cash gets bigger. Now that's reversed, and so they've got to put that money to work. If you look at the asset turnover, so sales to assets for Japanese companies, since 1980, it halved. And it's actually worse than that. Now they've actually got a large pool of assets that they can put to work. So, Toyota doesn't need to do a big Tesla financing to finance getting into electric vehicles. It's dangling its feet over equity cross-shareholdings and cash and real estate. That's the exciting part about it, is you ain't seen nothing yet. There's a lot in corporate governance that has been woken up with the end of deflation.
What a great time for us to be here in Tokyo, right? Covering these markets. Exciting times. Nick Smith, Japan strategist at CLSA, joining me here in the Tokyo studios. We continue, of course, to watch the BOJ because most watchers are reassessing the trajectory of interest rates and bringing forward their forecasts. That's after Governor Kazuo Ueda's hawkish messaging and his earlier than expected rate hike. Our Asia Economy and Government senior editor Brian Fowler joins us now with more. And Brian, did it take a couple of days, a few days, for the markets to sort of reassess what just happened with the BOJ policy decision? I mean, what are investors thinking now?
Well, Shery, I think it was a much more immediate reassessment than that. We did a one-day flash survey yesterday, and consensus now sees the BOJ hiking its benchmark rate to 0.5% by year end. Just for perspective, that's double the forecast we had in the previous survey. About 1 in 4 economists sees that next move coming in October, while about 40% say it won't come until December. Again, just for some perspective, let's remember that economists have consistently been behind the curve. They've underestimated Ueda's will to normalize policy. At the start of the year, most economists said the end of negative rates wouldn't come until April. Of course, that came in March. This time around, they said maybe the next hike would come until October, and we just had it this month, or last month, I guess now. So this time, even though the majority is looking for December, I think there's a very good case for the BOJ trying to get ahead of any potential political turmoil in the U.S. with the November election and going ahead with the next hike in October.
What are the risk factors here for this scenario?
Well, there are a few. There's growth, particularly with consumption. The BOJ's been looking for a recovery in consumption for some time, and we've seen it shrink for every quarter over the last 12 months. But there's some hope that the record high wage increases we saw this year, which are kicking in June, will start to influence spending from here. The other thing is global inflation. It's slowing, and if it continues to cool a lot, that could at least complicate the BOJ's messaging, but I don't think it'll stop the cycle. Remember, the BOJ's rate hikes this year are not meant at fighting inflation, unlike in a traditional case. It's all about normalizing policy. BOJ just wants to get interest rates back to a neutral range. And right now, even with the latest hike, policy settings are still quite accommodative. So there's a lot of room to run. Just a few minutes ago, we ran an interview with Kazuo Momma, a former senior official at the BOJ, and he's pretty honed in on these things, and he is among those saying that the next move could come in October.
Our Asia Economy and Government Senior Editor Brian Fowler there. More ahead on the Asia trade. This is Bloomberg. Intense flooding around the world this year has killed thousands of people and caused economic losses estimated in the tens of billions of dollars. And that's shining the spotlight on countries' flood defences. Bloomberg's Avril Hong has been taking a closer look. And so, Avril, if you take a look at the extent of the damage this year, and where are you seeing the focus when it comes to countries like Singapore to try and protect against future losses?
Yeah, it's been a really big problem this year, flooding. I mean, Munich Re put out its latest report this week, and it estimates damage in the first half of this year alone at $30 billion from flooding. I mean, we saw these floods in places where you don't typically see it, such as Dubai. And this $30 billion is not even accounting for what we saw in China, India, the US in the past month. So certainly a very, very serious issue, and one that could get even worse with climate change. You think about hot air and how it holds more moisture, leading to heavier rainfall. The question is, given how we're seeing economies slow, certainly the data out of the US even points in that direction, whether governments will prioritize spending on climate adaptation. For Singapore, the solution partly lies in this massive underground tank that they've been building to hold flood water, and I visited the installation. Take a look.
Wild weather this year has unleashed devastating floods around the world. From Switzerland to Dubai to Kenya and the provinces of southern China. Hundreds have been killed and hundreds of thousands more injured or evacuated. On top of the human toll, floods cause tens of billions in economic losses each year. The world's largest reinsurer, Munich Re, put last year's global damage at $48 billion, almost double the amount in 2003. The IPCC, the UN body that assesses the science of climate change, says weather extremes will only get worse in a warming world. That's increasing the urgency for climate adaptation. For land-scarce Singapore, part of the solution is this huge structure beneath the city's historic botanic gardens. The Stanford detention tank is designed to store excess stormwater from heavy downpours. The tank can hold 38,000 cubic meters of water, enough to fill about 15 Olympic-sized swimming pools. Floodwater is channeled here through a canal, all to protect the prime Orchard Road shopping district and prevent scenes like this from reoccurring.
So without the tank and without the diversion canal, Singapore's main shopping district will flood if we experience the same rainfall intensity that we had in 2010 and 2011. But with the construction of the tank as well as the diversion canal, our main shopping district is able to cater for a much heavier rainfall.
Projects like this don't come cheap. This installation costs $170 million to build. Not every country can prioritize spending on climate adaptation, but environmental engineers say not doing so would incur even greater costs.
the consequences are just unimaginable. If you multiply probability with a consequence of what would have happened if you are not protected, that even if it's extremely rare, but multiply with a consequence, it could become a significant, disastrous event.
Apart from preventing flood damage, adaptation projects can also pay dividends in other ways by attracting investment.
That actually gives reassurances to investors to, yes, this is the place in which you can continue to operate, run the business. This is a place where you want to build your data centers in. So that justifies the taxpayers' dollars.
So far, Singapore hasn't seen a repeat of the kind of flooding that prompted the building of the tank. For now, the massive facility mostly sits empty, but it's helping to future-proof Singapore, an example for other vulnerable locations in meeting the rising risk from extreme weather.
Obviously, there are huge gaps when it comes to climate adaptation. What can countries do, including developing ones? Are there opportunities for investors? We'll pose those questions to our guest later today, Sustainable Fitch's Melissa Chok. So I hope you join us for that. Back to you, Shery.
Right, everyone there joining us from Singapore. We have more ahead on the Asia trade. This is Bloomberg.
The latest on the corporate front that we're following, Norinchukin Bank posted a $2.75 billion loss in the first quarter after making bad bets on interest rates. The Japanese agricultural lender is unwinding about $67 billion of US and European government bonds this fiscal year. Adani Enterprises reporting strong first quarter profit boosted by solid revenues at its airports and mining businesses. The flagship unit of the Adani Group says net income reached over $170 million. Adani's empire has been regaining lost ground after battling a scathing short seller attack last year. Next week, we'll have a special in-depth coverage of the Adani Group. Beginning on Monday, we'll be speaking exclusively with Asia's second richest person, Gautam Adani, as he oversees a real-life succession story. We'll also be meeting with the family members that are hand-picked to take over the conglomerate controlling large parts of infrastructure behind India's $4 trillion economy. Our coverage will culminate with a special report next Friday, Shery.
Right, Haidi, luxury powerhouses including LVMH and Kering are facing a fast-growing foe in China. A gray market is trading brand new authenticated goods for discounts of up to 40% on the mainland. Our conglomerate's telecoms and media reporter Shirley Zhao joins us now for more on this. And Shirley, we have seen here in Japan lots of people coming to buy discounted goods because of the cheap yen. Is this just sort of playing the currency at this point? How is this happening in China?
Right. So the gray market is basically a version of a flight to Japan, right? According to one of the analysts who gave a comment to us. So in China, you know, the gray market is now dominated by this e-commerce platform called Dewu. And we learned from sources that growth on Dewu has been really fast over the past year. For example, sales for goods from luxury brands like Louis Vuitton, Dior, Hermes, Chanel, and Prada have all seen double-digit growth in the first half of the year as compared with the same period last year. For Louis Vuitton, for example, Dewu sales now accounted for more than 14% of their estimated official sales in China. So we can see that this great market, so-called, is growing very fast in China and is now becoming a main rival to luxury brands' operations within the country.
Are these brands worried about these sorts of parallel imports and including the likes of, as Shery mentioned, people just choosing to go to Japan to buy their goods?
Right. So people go to Japan and people go to other places where the currencies are perhaps weaker and where the taxes are lower and where there are access to cheaper channels, for example, wholesale channels that some luxury brands are opening up. So there are many ways to get luxury goods into China at lower prices. So this is basically like selling luxury goods at a steep discount, sometimes for as as much as 40%. So that's really affecting their operations in China, because remember, these luxury brands have invested billions of dollars in China, establishing their store networks.
Bloomberg Shery Zhao there. That is it for the Asia trade. Our markets coverage continues. This is Bloomberg.